Hi, welcome back to the channel. Today we're going to be looking at the Q3 earnings for Delta Airline. If there's an industry I don't like to invest at all, it's the airline industry. It's a very volatile industry. It's susceptible to government interference and a lot of risk in investing in that industry. However, it doesn't mean you cannot make money. You can still make money. I mean, I used to own shares of Boeing and American Airlines, but I don't have them again in my portfolio. The Q3 earnings for Delta Airline actually meet Wall Street expectation. The actual revenue is 12.84 billion. The estimate is 12.83 billion, while the EPS is $1.51. What was it? Expected is $1.54. So it's just in line with the expectation. But this is an industry I really don't like to invest in at all, because it's very susceptible to risk and insurance. You can ask a lot of investors. It is not an area where a lot of people want to invest in. However, let's have a look at the details of the Q3 earnings. Let's have a look at the website for Delta Airlines. I'm sure you all know Airlines, Delta Airlines. If you don't know Delta Airlines, you know American Airlines. But we'll still have a look at the website. So for those of you who don't know what Delta Airlines is, then you would. And we will see the detailed breakdown of the Q3 earnings. Then we'll also have a look at the technical chart for price action. Let's see what information we can get on a technical chart. I mean, we're still in bear market and there's likelihood of a recession. We keep saying that all the time, just so that you know. The inflation, the US CPI was out yesterday, 13th of October, and it rose to 8.2. So it's still like the highest in 4 decades. You see, so things are still not getting any better. Also, the energy, the soaring energy price. I mean, OPEC just cut about 2 million barrel per day, which is not it's not going well with the U.S. Congress and the Biden administration. The Saudi, it looks like they are taking side with the Russia. Technically, that's what it looks like, but it might not just be. But overall, geopolitical tension also affect this industry. Yes, geopolitical tension, because it's not easy to make that money in that industry. And as well, you are not just operating within your own territory. You're susceptible to other countries. So the other countries also might have their own policy that might affect your operations. Let's have a look at the website.
Here is the website for Delta Airline. As you can see, it's an airline business, so you expect this to be just like the usual airline operators. Their website, round trip, departure, return, passenger number, Los Angeles to whatever destination, or Lagos, Nigeria to whatever destination. I mean, they can tell that I'm from Lagos, or I'm based in Lagos, so it's showing from Lagos to from wherever. It's more or less the same with most operators. This is what you see on the website. In fact, I would strongly believe that it's the same designer or creator of website that create for most of them, because it's very similar. Yeah, let's have a look at this link. Traveling the world just got easier. Everyone has their own word supporting you through your travel journey. It's all about making travel easier. And in fact, they seems to have an app like most operators. But let's have a look at the earnings. Um, Here is still part of the website, but then here is more of the Delta Airline announces September quarter 2022 profit. Um, Record quarterly revenue and second consecutive quarter of double digit. Okay, basically they're talking about that recorded second digit operating margin, return operations to industry leading reliability. This is post COVID-19, so you can expect all this. Expect December quarter revenue recovery to accelerate relative to 2019. So 2019 is pre-COVID. So we're going. I mean, they're telling you that they're going back to pre-COVID, technically, returning the operation back to that level. Um, let's have a look here. Delta, thanks to the incredible work of our entire team, Delta delivered a strong September quarter with record quarterly revenue and a double-digit operating margin. The travel recovery continues as consumer spend shifts to experiences and demand improve in corporate international, said Edie Bastain, Delta Chief Executive Officer. In this environment, we expect December quarter revenue growth to accelerate versus 2019 with an operating margin of approximately 10%. With strong demand and return to best-in-class operation performance, we are ahead of our plan for the year on profitability and expect to be free cash flow positive. We are working towards full network restoration by summer 2023, which support a meaningful step up profitability and cash flow next year on our path to earn over um, $7 of EPS and 4 billion of free cash flow in 2024. Bastain said. September quarter 2022 gap financial result. As you can see, operating revenue of 14.0 billion, operating income of 1.5 billion with an operating margin of 10.4%. Earnings per share $1.08. Uh, Operating cash flow is 869 million. Payment on debt and finance lease obligation 1.8 billion. Total debt and finance lease obligation of 23.2 billion at quarter end. September quarter 2022 adjusted financial result, operating revenue of 12.8 billion, 3% higher than September quarter of 2019, including 35 million impact from Hurricane Ian, operating income of 1.5 billion with an operating margin of 11.6%. Earnings per share of $1.51, including a €3 impact from Hurricane Ian, 11.2 billion in liquidity, and adjusted net debt of 20.5 billion at quarter end. December quarter outlook, total revenue, we can see Q4 forecast. Okay, total revenue, as we see here, is up 5 to 9%, operating margin 9 to 11%, earnings per share $1 to $1.25, adjusted net debt, that's a negative 22.5 billion. Non-GAAP measure refer to non-GAAP reconciliation for Q4 19 comparison figure compared to December 2019. Additional metrics for financial modeling can be found in supplemental information section under quarter results. September quarter revenue, environment and outlook. We reached a major milestone this quarter with adjusted revenue 3% higher and unit revenue of 23% compared to 2019, marking the highest revenue and unit revenue quarter in Delta history. Our results reflect strength of our brand and diverse revenue stream with another quarter of record co-brand remuneration and continued premium product outperformance, said Glenn Houston, Delta president. With corporate travel improving and robust domestic and international demand, we expect the December quarter revenue to be up to 5 to 9% compared to 2019 quarter. Consumer demand remains robust with improving demand of for international travel. Domestic passenger revenue was up 2% higher, and international passenger revenue was 97% recovered compared to the September quarter of 2019. International unit revenue growth outpaced domestic for the first time since the pandemic. Transatlantic demand was driven by leisure destinations such as Italy, Spain, and Greece, improving business demand with transatlantic revenue up 12%. Business outlook, premium product, record American Express remuneration, uh, Hurricane here impact. Let's have a look at this. September quarter cost performance and outlook. We delivered 1.5 billion of operating cost with a 12% operating margin in September quarter, despite costs related to our rebuild effort as well as inflationary impact felt across industry, said Dan Jankin, Delta Chief Financial Officer, with capacity expected to be 91 to 92% restored to 2019 in December quarter. Non-fuel unit costs are expected to be 12 to 13% higher, improving 10%, 10 points sequentially. Improving asset utilization and efficiency remain key priorities as we move into the final stage of rebuilding the airline and work to drive competitive cost structure. Operating expense of 12.5 billion and total adjusted operating expense of 11.3 billion, adjusted non-fuel cost of 7.8 billion, non-fuel CASMIN was 22.5% higher than September quarter 2019 and 17% less capacity. Adjusted fuel expense of 3.3 billion was up 45% compared to the September quarter 2019. Adjusted fuel price of $3.53 per gallon includes a refinery cost of 21, okay, that's in euro per gallon. So fuel efficiency defined as gallon per 1000 ASM was 14.8, a 3.0% improvement versus 2019. Look, they're comparing this to 2019 because 2019 was the last year before COVID lockdown. That was when things were still being normal. So, I mean, this is like going back to pre-COVID. So that's the right figure to actually compare their performances to. Let's have a look at the technical chart. You can still have a look at all this in your own time, but let's have a look at technical chart for price action. On the technical side of it, we have market capitalization 20.92 billion, shares in float 63.8 million, shares outstanding 641.2 million. The EPS rating is 80. The PE ratio is 17. 5-year PE range is 2 to 63. Return on equity not applicable. Um, Cash flow is negative. These are the past EPS and up to 2019. I mean, this industry, the airline business is not an easy business. Um, it's not year in year out. It is difficult to actually stay making money. With huge margin in this industry. Let's The market is currently open. Today is 20th 10 2022, and the stock price is actually $32.77. The 52 weeks high and 52 weeks low. 52 weeks high is $46.27, while 52 weeks low is $27.20. It is currently trading minus 29.2% off 52 weeks high. Given that we're still in bear market and there's likelihood of a recession. And also, you should know that the high cost of fuel, the soaring energy cost, and all that is still affecting, global inflation. Uh, is causing instability, and also the zero lockdown in China for supply chain and other factors. But let's have a look at the ownership structure here. uh, Ownership percentage. Funds own 41%, bank 0%. On a checklist, Peter Lynch, 4 out of 8. Well, I don't expect more than that. Warren Buffett, it's 10 out of 16. Airline industry is a tough industry. Benjamin Graham, we have 5 out of 13. So let's have a look at the market technical. We are currently trading above 10 weeks moving average, but below 40 weeks moving average. The 10 weeks moving average is the red line here. So we're trading above it, but we are trading below 40 weeks moving average. But as you can see um, here, I would say the market is still a bit trending downward. Even the moving average can tell you that. But before then, we're still in a bear market, and all stocks are actually, equities are fairly well priced these days. So let's have a look at it on a daily chart. On a daily chart, as you can see, we have a bullish move. The market seems positive the last few days, and here, as you can see, so we have it breaking this resistance on the upside, But before then, this is what we experienced. The market has been trending down this year so far, and it's very obvious on the chart. The lines doesn't have to be perfectly accurate. It's not supposed to be like that. But this is a bullish move, and it shows that on a daily chart we're trading above 15-day and 50-day moving average. It is very significant, as you can see. We are trading above 15-day and 50-day moving average. So it's more on a bullish move.
You have seen the technical chart and you have seen the website. Delta Airlines is one of those industry. One of the operators in that industry that I don't like to invest. American Airlines, I used to own them. BA, I used to own BA. They're different from defense industry. Like Lockheed Martin's is a different one. They actually make much more than and there's still Ukraine and Russia war going on, so they are still making a lot of money. But then, guys, do your valuation. Make sure these stocks are good for your portfolio. Do not just buy stocks because you watch it on a YouTube channel or because we are talking about it. Do your valuation. Have your own metric. Use the right way to evaluate a business, not just the chart. Technical chart is good. Fundamental information is good. They guide you, but you also need to look at the book. Yes, you need to look at the balance sheet, the cash flow, and the total liability to free cash flows, so you can understand so you have an idea how long a company would take to pay its current debt if they have debt, which is normal. It's normal for a company to hold, but you need to know that they're not owing more than what they can pay in the next 3 or 4 years. Anyway, thank you for watching this channel. We continue to produce content that will support your investment journey. Please call again.